So I wanted to talk about Ford stock today. I wanted to explain why Ford stock's been running up quite recently and why I think Ford stock may be a secret EV play that many people are discounting. So in the past week, Ford stock's been up around 9%, past 3 months up around 23%, past year up around 141%, and the 5-year chart it's only up 11%. So people might be wondering, oh, that's not, a significant gain. Even 140% in 1 year. I've seen so many other stocks do that. But what makes this special is that Ford is a very old company. It's one of the oldest companies in the United States. It was founded in 1903. And what happened? It was in a big decline for the past 5 years. It went to around $4 a share. Now it's back up at 14%. It's, I believe, at a 6-year high right now, and it's continuing to go higher and higher. So why is an old automaker going up so much? Well, Ford in the past week has been releasing positive news after positive news. Ford said they will spend $30 billion in EV vehicles by 2025, and by 2030 they want the entire Ford fleet to be EV. They announced the F-150's margins going up due to it being electrified. They announced the Bronco having a positive cash flow, meaning that their Broncos will sell at a big profit and at a cash positive profit compared to some of the other cars where they had to take losses due to manufacturing issues, due to design issues, and due to overall overhead expense. And then this has caused Ford to be upgraded by bank after bank after bank. I believe RBC is the 10th bank this past 5 days to boost Ford Motors price target. They've been boosting it from 13 to 17, 5 to 10, and it's quite amazing, to be honest. And I think it's very interesting. While Ford is still an old stock, they're making innovations which we haven't seen before. That's why you see this spike in price. But what concerns me is the Ford balance sheet. Old companies always have so much debt that it makes you uninterested in the stock. For example, the total current assets in the last quarter for Ford, it was around, I believe, 113 billion, while their total liabilities were 226 million. So that means they have double more liabilities than assets, and that's never good. You can look at any stock throughout. If you have more liabilities than assets, your stock will suffer. Look at Kraft Heinz, look at AT&T, look at Ford, look at GE. They've all suffered so much. I like how Ford's being favored, but if they can clear their debt, I think Ford can come into a revival mode where Ford will go above $30 to $40 a share if they play their cards right. Ford is not, a too expensive stock. It's worth $54 billion. It's still worth a lot, but again, understand Tesla is $700 billion, and Ford already plans to manufacture more cars by the end of this year in the EV space compared to Tesla. Ford has a bigger margin apparently, and I would like to see where Ford's going. I really don't think Ford can, do a 10x from here. But I do see Ford, if they can pay off their debt, they can stay below the radar, it will be, probably a $30 to $40 stock in the next couple of years.